In today's webinar, Steve Jaynes and Lara Moroko are going to consider how we should be developing and implementing strategy in the currently disrupted times. Steve is an Associate Professor at Macquarie Business School with extensive experience in teaching, research and consulting in the areas of strategy, leadership and organisational design. He's the Director of Macquarie University's highly regarded MBA program. Lara Moroko is a highly awarded educator, researcher and consultant in the areas of innovation and entrepreneurship. For Macquarie Business School, Lara teaches courses on innovation and entrepreneurship and the business model canvas. Today's webinar will be recorded and a link will be provided in our follow-up email. We'd also encourage you to use the Q&A function throughout the webinar, and there will be opportunity for Steve and Lara to answer your questions. With that, I'd now like to hand over to Steve. Thank you.
Thank you, Tony, for the introduction. Really the simple question that has generated this webinar is, what about strategy? As we all know, there is heightened business volatility. There's a great deal of unpredictable change happening around us. Does that make strategy, for example, a luxury that we can't afford to indulge in? Does it mean that organisations, leaders need to really focus on survival, day-to-day survival and operational viability? And we would argue, yes, of course, that's fundamental. And we will also argue in this webinar, it's important for leaders and managers to step back from the noise around us and get back up on the mezzanine floor, if you like, and regain that strategy view, because this environment that we're in now is different, it's shifted, and it really means understanding what are the opportunities and threats that are arising now with sudden change that's been going on. So in order for us to build this argument, I'm first going to look at revisiting the three key characteristics of strategy, and oftentimes it's easy to forget just what strategy is. I'll then look at the idea of strategic location, and as we go through this, think of your own organisation, think where you might locate your organisation in its marketplace. I'm then going to rework the three horizons model, which I think is particularly relevant for today's environment of significant change. We need to, though, reset some of the key points on those three horizons. And I'll then pass over to Lara, and she's going to bring this sort of strategic thinking through to action. And again, think of your own organisation and how you might apply the sorts of implementation steps that Lara will bring to you in respect of entrepreneurship, customer rediscovery, and the business model canvas. So to begin with, let's just remember just what strategy is about. And firstly, let's think of repositioning. Those of you that might have shares in Atlassian, you might be coming into this webinar from the Bahamas because that's a very successful global software products company. And if you've examined what Atlassian are doing, they started here in Sydney some years ago, just with the global financial crisis as they are now, they see opportunities in their business landscape. They are hiring for talent now. With the labour market a bit soft, there's talented staff available. They've launched a remote work hub, and they're also providing a number of their software tools for free on their one-year standard plan. So there's an example of an organisation that is making decisions today for tomorrow, and it's looking to see how those opportunities in its industry are arising now. Also a little bit more mundane, but think about Woolworths and Coles. They have been quite successful in a mature industry to build their online offering, to fine-tune their online offering and their home delivery. Whereas in contrast, IGA are only really just starting rather late in that position. So it's repositioning today for tomorrow, one of the key concepts of strategy. Another one is competitive advantage. Think of pure online retail companies like Kogan and like Temple and Webster. They've got very cost-efficient business models. They're not burdened by lease or rent payments. They are using data analytics to fine-tune their offering to customers, and they're continuing to take share from bricks and mortar retailers. And so there you see another example of organisations both repositioning and building their competitive advantage for tomorrow, and they're seeing and doing that today. That's the key point. Another one is adaptive capacity. And here think of our largest company by market capitalisation, CSL. And again, if you've been a shareholder in that company since it launched in the 1990s, you've done particularly well. A very well managed company, strong research and development. They've got about $1 billion spend annually on R&D, and that then leads through to new innovations in the blood plasma and vaccines health sector, and they've got a very good track record of commercializing those new vaccines and blood plasma products. And they've moved quickly. They've built blood plasma collection centres in the US ahead of their competitors. So they're well positioned now for growth and increasing demand, especially in Asia. So that's about building sustainable capability now for tomorrow. So key aspects of strategy that make it very relevant in the current environment that we're experiencing. So from that remembering of what strategy is through to this sort of chart I'm showing now, we're looking at now, this is, I think, a very powerful illustration, and think again of your organisation or one you're familiar with, where you would locate it on this chart. You can see the environmental change denoted by the blue line. And typically, as you can see through phase 1 and phase 2, that's moving along quite steadily. But then in phase 3, it starts to move away from where organisations typically change and perform. And that's, you can see by that step-by-step line, that organisations typically change incrementally, step by step. By phase 3, we've just had, of course, we're going through our pandemic now, which really unfolded here in Australia in March. And you can see there a sudden shift north in the business environment, the operating environment for many industries. And that's where things become critical. So this is a relevant illustrational chart to think about for your organisation, and in particular for today. So for Myer, for example, we know that's been in decline since the early 90s. And it's an example of an organisation that has failed to make significant change to get back in touch with its marketplace. And that's been replaced by category killers, the likes of Zara, and it doesn't have a compelling online offering. So you would position Myer somewhere down there in terms of transformational change, or it may go out of existence. We just don't quite know what will happen with Myer, but it is certainly performing very poorly. In contrast, Kogan is a company that is very in touch with its marketplace. It's cost efficient. It is fine-tuning its online offering. It's diversifying into insurance and telecommunications. It has the Kogan marketplace, which brings buyers and sellers together. So a very successful company. I've already mentioned CSL. That's very much in the sweet spot between the macro drivers of growth in the health sector, and it brings to the health sector, as I said before, strong, sustainable capability in innovation, in research and development, and in commercialisation. So you can certainly place CSL there. NAB, somewhere in the middle there in terms of a state of flux, issues around governance and culture, outdated technology platforms, losing market share to the fintechs. So again, an organisation that has failed, along with the other big 3 banks, to make significant structural change as the marketplace and its environment has shifted away from it. And so that will be an ongoing problem for the big 4 banks. So again, think of your own organisation, where you would place it on this chart, and perhaps what needs to be done now, today, for tomorrow's performance. The final model I want to bring us to here for this resetting strategy session is the 3 horizons model. And I think this is particularly relevant for the current environment that we are in now. And again, think of your own organisation or one you're familiar with, and look across those 3 horizons. Horizon 1, your core business. It's your managerial mindset. It's your basic products and services that provide sales and revenue and sustainable viability today. But you can see that that is generally going into decline as new products and services, innovations take place in your industry, and that's represented in Horizon 2. And then you've got Horizon 3, which is really the future. And many of those projects or ideas might not ever find the light of day, but of course some might, and that will reshape the industry. I will argue with this 3 horizons, it's very pertinent, and the horizons are getting compressed. So you can see there that 1.5 years out, and that will depend on the industry that you're in, it might be 2 or 3 years out, is really now today with the pandemic that we're in, and a requirement oftentimes to operate digitally, to be online, and to be delivering to your customers in different ways through different channels. That's now here today. And so in terms of particular organisations, I did speak about Atlassian. I've got it showing there just to depict it really as being a very entrepreneurial company. Of course, every organisation operates in each of the three horizons. The argument here that I'm making is a need to shift resources from H1 to H2 because the future, as I say there in the title, is now. So Atlassian is very much operating well in entrepreneurial projects, products and software tools, project management tools for tomorrow's industry needs. Tesla, we know, is disrupting the automotive industry. Electric vehicles are around us now, and we are shifting that way given climate change and given technology. So you would position Tesla somewhere here around that disruption point from Horizon 1 to Horizon 2. And then SpaceX, again, Elon Musk, it's visionary. He wants to die on Mars, but not on impact, as he says. And he's now saying that that probably won't happen because innovation's not happening fast enough for him to get to Mars to live in the first place. But that's really the visionary Horizon 3 mindset. So for your organisation, have a think about where are you now in your organisation? Are you, for example, captured by the Horizon 1 mindset, and therefore there's too much in the way of resources and focus on that? And we spoke about Maya. You could also bring Target in there in terms of its current mindset. Therefore, what's relevant in Horizon 1 that you need to manage and sustain? What do you need to let go and shift out of your operating mindset? And then what entrepreneurial projects and activities do you need to really scale up in scope and scale and shift resources to? And that's Horizon 2. And then there's Horizon 3. So it's really an argument that these horizons are compressing, and there's an important requirement to reset your focus, time and energy and resources from H1 to H2. So in respect of this, these are sort of a couple of tools for you to think about strategy in the current environment. And I think it's very helpful to remember just what strategy is and how we can reset our mindset for this environment and how we need to act today for tomorrow. It's key now, though, to think, how do we bring that through to action and implementation? And for that purpose, Lara is going to take you through some ideas and action decision points around rediscovering your customer, entrepreneurship, and the business model canvas. So over to you, Lara.
Thanks so much, Steve. And I'd like to start off where Steve ended on the 3 horizons model. And I particularly like this model because it helps us make really tangible decisions about setting strategy practically for the future. So when we think about the 3 horizons model, it makes us zoom in on 2 really important things for practical strategy setting. The first thing is focus. So Horizon 1 is where our focus is now, where we're expending our resources, our time and our effort. And so Horizon 1's all about now. Horizon 2 is around what happens next. And Horizon 3 is about what happens later. So 2 and 3 help us also zoom in on something that's critical to good strategy, which is strategic momentum. So by thinking about what's happening now, next, and later in terms of our practical strategy setting, we're really creating a good pathway to understand where our growth opportunities are coming from. Now, I also like this representation of the model because it makes us focus on the fact that Horizons 2 and Horizon 3 opportunities don't just pop out of thin air. We actually have to start creating a platform for that growth today. We think of this as creating a pocket of future in the present and laying the foundation for strategic growth into the future. Now, I know many of you are thinking, well, that's great, Lara, but it's so hard for me to forecast what's happening this month or this quarter, let alone knowing what's going to happen in Horizon 2 and Horizon 3 for my business. And fortunately for us, the theorists and strategists of the past have done a lot of work that is really relevant and interesting now and can be applied to setting your strategy going forward, even in these turbulent times. So there was one great strategist of the 20th century, Igor Antsov. You might have heard of him. He was incredibly influential and well regarded. And he spent the second half of his career really delving into how companies set strategies in different types of market environments. And the thing that he found was that most companies are pretty good at setting strategy where there's a low or medium level of market turbulence. So when markets are stable, when they're expanding incrementally and predictably, or when there's change, but the change is predictable. So if a competitor is entering your market, for example. What he found was that when market turbulence increases, that it's actually difficult for many companies to keep up with that environmental turbulence in their strategy setting. They might hunker down and either miss some of those opportunities for growth, or as Steve explained, actually create strategic drift where they're not keeping up with the market and the market demands. So he found in his research over many years at lots of companies from different countries that those companies that did really well in high levels of environmental turbulence took two really key approaches. One of them was to really lean into the environmental turbulence and take an entrepreneurial view of the market and set their strategy accordingly. And, pardon me, the second aspect was when there's surpriseful change, like we're seeing now, it really is hard to anticipate what was happening, that companies who were creative and collaborative, particularly with their market and their customers, tended to do a lot better than companies who just sort of hunkered down and pretended that the turbulence didn't exist. Now, that was in the 20th century. Let's flash forward today and see in 2020, what do we have available to us that helps us take that entrepreneurial and creative view? Fortunately for us, in the last 30 years, there's a toolkit that has been developed. It's called the entrepreneurial or intrapreneurial toolkit, and that helps us actually identify with the market opportunities for growth in a structured way. Now, for those of you who aren't familiar with the term intrapreneurship, it's merely taking an entrepreneurial approach and using the entrepreneurial tools in a large or established organisation. So that's one part of practical strategy setting that we need to adopt, is to really take a deep dive into that entrepreneurial and intrapreneurial toolkit. The other facet that helps companies in times where it's incredibly difficult to predict what's going to happen next is to have a creative and collaborative mindset with your customers and the market. And together, those two things help us set a robust strategy that's flexible, even when markets can be challenging and hard to anticipate. So what I want to do now is just take you through a sequence of steps that you can follow starting this afternoon, straight after this webinar, to help understand where your opportunities for growth are and reset for growth, and how you might think about adopting those opportunities for growth in a flexible way over time and over the three horizons. So when we think about the entrepreneurial toolkit, what we're really thinking about is searching for growth opportunities with our customers. For companies that are just starting out and don't really have customers yet, that means going out to people who might be their customers one day. But for people who have been in business for quite some time, like me, it means going back to our existing customers and checking in to see how well our market offerings, our products, our services, the experiences we're offering to the market, how well that's really solving the main problems, addressing the main pain points, and creating enough gain for our customers as their environment is now. So like you and me, our customers' environments have changed, and sometimes that means the big problems that they're trying to solve have shifted, and your product, services and experiences may not really be solving their problems as well as they were in previous environments. So the first thing that when we're looking for an opportunity for growth that we can take forward into the future, the first thing is to really take a deep dive, pick up the phone, get out of the building, schedule a Zoom call and talk to your customers and really listen to what they're telling you. So once we get some insight from the customers about what problems that they're trying to solve now and what problems they see in the horizon, we can start thinking about how can we solve those problems with the resources, activities, and partnerships that we have at our disposal in our enterprise to deliver something of real value to the customers. Now, in a normal circumstance, you might be tempted to think of an idea and then push it straight out into market. But thinking entrepreneurially and following the entrepreneurship toolkit, what we're really doing there is going back to the customer and validating that the idea that we have to solve their problem actually solves their problem and the value to the customer is clear. So we're testing, do we have a meaningful solution where the customer says, yes, this solves our problem way better than even your existing products or our competitors. And this is the deal breaker, will the customer pay for it? So you might think of a great solution, but the customer will say it's too complex, it's too expensive, it's too hard to integrate into our ongoing business or our regular systems. And in that case, if you get that feedback, we do something called a pivot. You go back to your team, you take the information that you've gotten from your customers, and you reconfigure your product, service, or experience, your market offering, until you can get from your customer an idea that you are really solving their problem and the value to them is clear. Once we've landed on something that is a winner in terms of the customers, and we know that we've got a growth opportunity that will resonate with the market, then and only then do we move to strategic execution. So at that point, pardon me, at that point, we think about how big is this segment that this market offering is applicable to, and is it actually worth our while in terms of putting our resources and energy into this growth opportunity. So sometimes this step is called customer creation, but I've always found that to be incredibly confusing as a phrase. So I think of it as segment creation, where it's really, are we solving a problem that's pressing enough for a big enough segment in the market? And then and only then do we think about how can we organise our enterprise to deliver on that market offering profitably. So those are the 4 steps: customer rediscovery, customer validation, segment creation, and company building. That can be quite hard to keep a track of. And so in that case, what we do is we map it all out on this tool, which is a business model canvas. Now, I'm sure some of you have seen this before. It's a great tool that I've been using for some time. And a business model canvas actually just helps us understand where all of our assumptions are about a growth opportunity in terms of the right-hand side, what the customers need and want, and the left-hand side, how we're going to organise ourselves to be able to deliver on that. So just as I said, when we're using any sort of business model canvas or lean canvas, we always start with customer segments first. For whom are we creating value? What do they need and want from us? And then we look at the value proposition, what bundle of products, services, or experience we're offering that has real value for the customers. And then and only then do we think about things like how will we capture revenue, what relationships will we have in channels. And then after we've understood how we're going to deliver something to the market, we organise our company to do that profitably. So getting back to the 3 horizons model and just pulling everything back together, what we can see with this approach, even when markets are changing and hard to predict, what we see is that we can look now in Horizon 1 where we're focusing, map out our business model and make sure that we're optimizing that business model to deliver value to customers as they are now. And then we can think about and talk to our customers about what they might need next into the future. And then there's always nuggets when you have customer conversations where they say, oh, what we're really looking to build with our medium-term strategy is A, B, and C. And then you can think about how your business model might need to evolve to capture those ongoing growth opportunities and lock in some strategic momentum for your enterprise so it's resilient even when the markets are really turbulent. Now, that's the a formal presentation component of the webinar completed, and I'd like to hand over to my colleague Suzanne, who's going to moderate the Q&A for all those questions that you've popped up and given to us today. Over to you, Suzanne.
Thanks very much, Lara, and good morning, everyone. So, Steve, you revisited the concept of strategy earlier. Can you reiterate why strategic thinking is important in the current environment when, for a number of organisations, survival is all-consuming?
Thanks, Suzanne. Yeah, that's a great question. And if we go back to that core concept of just what strategy is, fundamentally, it's how well an organisation is managing its relationship with its marketplace. So it's really that match between your capabilities and the opportunities in the marketplace. So given the rapid change we've just gone through, and we do go through this cyclically, it's important for leaders and managers to reset, to again look at the marketplace and to see what opportunities are arising and what threats are there, and therefore adjust appropriately to that shifting landscape. So again, it's that fundamental tenet of what strategy is: managing, positioning and repositioning for future growth and profitability. It means you need to be, again, up on that mezzanine floor or the balcony, as well as down there on operating mode as well, making sure that those two arenas are connected.
So you're saying resetting your strategy is how an organisation will survive and grow, as opposed to pursuing the same strategy and hoping for a different outcome?
Absolutely, Suzanne, because we see with the three horizons that Lara drew on as well, that Horizon 1 eventually is going to go into some sort of decline. So that Horizon 2 and Horizon 3, really that's the future. And the point is, we don't wait for the future till tomorrow, we act on that today. That's a hallmark of very good strategic leadership.
Thanks, Steve. So Lara, we've heard of companies adapting in the short term, like distillers making hand sanitizer. Do you have examples from more complex B2B organisations of smart adaptation to a post-COVID environment?
Oh, absolutely, Suzanne, and thanks for a great question. So what we see in more complex markets is that really smart companies are adapting to meet the needs of their customers as they're evolving. And the example that comes to mind is a lot of medical devices companies who make the thing that they put into your knee when you get a knee reconstruction are actually moving into an area of robotic surgery. So those surgery robots are they're big, they're expensive, and they're hard for hospitals to actually purchase and afford, particularly in this environment where they're not getting that throughput of surgery that they might have done before the COVID-19 restrictions. So those companies, the really smart companies, are looking at how they can make sure that the robots increase surgery throughput. So they're addressing a real problem for hospitals now, making sure that their revenue is maintained on a daily basis, but they're also changing their pricing structure to make sure that they don't get excluded from the initial purchase decision by unbundling the price. So they'll sell the robot maybe at less than the capital cost, and actually make that up on a software contract for continual update for the robot. So for the medical devices company, they're getting a big capital injection and an annuity income stream, but more importantly, they're solving a big problem for their customers in terms of defraying some of that upfront cost and spreading it over the future, where the hospitals are more likely to have a resilient bottom line.
There's so many great examples. I think one of the examples I'm thinking of is Food by Us, which is a B2B wholesale food supplier that pivoted their business model to B2C, which in turn has provided a service not only to consumers, but it's also supporting farmers and suppliers and importers.
And I think it is a fantastic example, Suzanne, because those companies who think about two things, one of them is the entire chain of value where they're a part of and delivering value across that chain, but also giving back to the community in times of distress can be a particularly good strategic move because it builds your reputational capital and can give you more strategic options, basically just through goodwill as you move into the future.
Thanks, Lara. So Steve, you made a range of points in relation to the Three Horizons model. In short, what does the model offer leaders that is of real value in this time of rapid change?
Yeah, thanks, Suzanne. I think there are a number of points, but there are two key points. One is for your own organisation, consider to what extent you are operating across those three horizons today, and whether, in particular, the challenge is, are you captured by Horizon 1? That would be a key question for most organisations. Are you doing enough today for tomorrow that is in Horizon 2, which gets you through to the future? So that's, I think, the first thing. These horizons that you can think of are like mindsets or perspectives. And the thing with mindsets is we often don't know that we have them. So if you can step out of that mindset, understand it as a perspective, and then look across the three horizons or perspectives to make sure that you have got an allocation of resources, time and energy, and decision-making in those, the right balance. And I'm arguing now that Horizon 2 is critical with what we're going through. And that the final thing, of course, is understand what's happening today, what are the innovations in your industry that are shifting that industry to the future, and then how do you make sure, again, that you're organising and building capabilities in that Horizon 2 mindset that takes you through, if you like, to Horizon 3.
It sounds like that the three horizons model can be equally applied to organisations burdened by legacy, as well as those that are probably market disruptors. Was that fair to say?
I think so, Susanna. It's critical for legacy organisations, you know, that are in that tradition of how they operate and their products and services. It's really critical to reallocate toward Horizon 2. And we did talk about Maya. I didn't really talk about Target, but I could have, in terms of its middle position that it's trying to occupy and getting squeezed on both sides in the department store industry there for Target. So it's critical there in terms of making that transformation. But if you're already in, if you like, in Horizon 2, then it's just about continuing to look to the future. It's less about reallocation from H1 because you're probably already well in H2 in terms of your focus.
Great. So I'll ask this question of you, Lara, and perhaps Steve, you could also add your comments. Are there any differences in setting strategy for B2B versus B2C as per our food by us example?
We used to, years ago, make a huge distinction about strategy setting from B2B to B2C. And I'd argue now in a turbulent environment that those differences, which really came down to the time horizon that you would set strategy over, I'd argue that those differences are disappearing. And we also know that really good B2B businesses think of not only their relationship with their B2B customer, but their customer's relationship to the end buyer or user. And understanding that value chain actually helps create competitive advantage for this B2B company, because they can help their customer delight the end customer or user, and they become a much more valuable and integrated partner over time. So in summary, I think it's really, it would behoove any enterprise to think about what value, real value, the customer, either their immediate customer or the end customer, is seeing in their market offering, and whether they can, even in Horizon 1, fine tune it to deliver that clear value today as the market evolves and the environment changes. Steve, have you got anything to add?
Well, really, I think that's the principle I would adhere to as well, Lara. I don't see a great distinction and less distinction over time. Really, again, get back to what strategy is. It's managing the relationship between you and your stakeholders in your marketplace. So whether they be other businesses or even inside your organisation, you can treat, you know, if you're in production operations, your marketing department, you can treat them as a customer as well. You might look after them better in that respect. So I think that fundamental relationship's key, and it's not really different whether it's B2B or B2C.
I love that, treating your internal customer as if they are your external customer. That's fantastic. So Steve and Lara, we've heard a lot about Qantas in the news recently and how it's reorganising how it operates in the future. Do either of you have any advice for Alan Joyce in regard to Qantas's strategy and resetting it for growth?
Yeah, I'll have a go first, Lara, then I'll hand over to you. Look, it's a tough airline. The industry for airlines is very tough. And as Michael Porter says, it's the least profitable industry, I think, next to the hotel industry. Alan Joyce is, is you would have to say a strong leader. He's made hard decisions already, and he's already, again, making hard decisions in terms of laying off staff, because really he does need to maintain the viability of Qantas for the future. I think it's probably going to be shrink to then grow. And I think it's going to be looking at hygiene and safety. So restoring the confidence in the public that fly, that it's okay to be back on traveling in the air. That would be one thing. It's also be diversifying. It's got a very strong frequent flyer business division. We know that. So how can it continue to build that income stream from that unit? But look, let's not skirt the issue. It's going to be a contraction for Qantas. But thankfully, because it's been so well managed, it hasn't come into COVID-19 with $6.8 billion of debt, such as Virgin is now been taken over by Bain & Co, I believe. So it's been well managed. So it is positioned to be able to move through this and to gradually rebuild. Lara, what are your thoughts?
Oh, I think that Qantas has a great challenge and also opportunity in terms of how they roll out their people-facing strategy. So that's their employees, so how they deal with those employees as they transition to a leaner, cleaner operation to really downsize and maintain resilience throughout this period. But also when you think about their assortment of customer segments. So in the past, they relied very heavily on business travellers, particularly in the domestic market. And, you know, that market has really been overtaken by basically what we're doing now. So Zoom and other virtual meeting platforms. So when you think about that market shrinking, and then really what we see is that the domestic and sort of local international leisure travel market increasing. So it's really important that they get that balance right, and that they really signal to people who are doing leisure travel that Qantas is a good value provider, that, you know, that segment might have been a little bit neglected in the last maybe decade. But now that if that is their key source of revenue and key source of growth and resilience over the next period, that they absolutely have to deliver plenty of value and treat that segment with respect in order to come out the other side of this environment.
Thanks, Lara and Steve. So we've got a lot of great questions coming through, particularly about Three Horizons and customer discovery. So we've got a question from Michael, and that question is, how do you identify the horizons, Steve? What research and insight should you be pursuing?
Yeah, good question. Thank you, Michael, for that. Look, it's the old classic pestle model. That's the macro analysis, and it's been around for some years. So that's looking at the political, economic, technology, legal, and ecological drivers in the macro industry that are impacting on your industry. And so really it's scanning that marketplace and the wider impact on your industry. We know, of course, that technology and climate change in terms of the environment are two big drivers of change. So it's understanding how that's impacting on your industry. It's looking to see what other competitors are doing, what smaller companies coming in on the margins are doing, because they oftentimes are more agile and nimble and able to do things differently. So it's really that scanning and analysis from outside in, so macro to industry and then back to your organisation.
Oh, sorry, can I just jump in there, Suzanne? I'd like to add to that, to think about the mega trends in terms of customer needs and wants, and thinking about how the current physical environment is changing how people behave and what their preferences are. So if you think about the classic marketing drivers, you know, what do people need and want from us, but also how do they want that in a low touch economy where, you know, interaction with humans is less desirable than it used to be for many places, but also enabling those changes with emerging technologies as well. So wrapping those, understanding what customers, those mega trends are that customers need and want, particularly things around low touch and technology enabled, and really technology that's sticky and not clunky, really thinking about how that applies to your industry and how that might be adopted and demanded from your customers as they emerge from this sort of strange period of lockdown into more commercial activity.
Thanks, Steve and Lara. So we've got another question from Mike, and he's saying that his business has a big scaled Horizon 1. How do you give Horizon 2 the oxygen and attention it needs while not increasing the decline in the core business? That question for Steve.
Well, that's an excellent question. That's a balancing question. Look, sometimes I think it does mean you need to let go of some things you're doing in Horizon 1. So first, it's engaging in strategic thinking. So it's stepping back from the day-to-day, because often we're captured by the day-to-day. And a lot of organisations don't really practice strategy that effectively. And that's argued by a number of commentators in some recent surveys here in Australia. So it's stepping back to strategic thinking. It's seeing what you need to maintain in Horizon 1 for that ongoing viability, but then what's in decline, and then making some hard decisions. It's not easy to reallocate toward Horizon 2, and that's again is understanding what are the dynamics driving change in your industry. You won't get everything right, but it's about being in the market and trying new things. It's having a bias toward action. Any thoughts, Lara?
Oh, I think that absolutely it's a worthwhile exercise to map out your current business model in Horizon 1 and really look at not just everything you do to deliver value for customers, but the things that are critical for delivering value for customers, and the things that you do because you've always done it that way. And that latter basket is a really good place to start when you think about reallocating resources from those activities over to investing in Horizon 1. The other thing I would say is that in every organisation, there are natural Horizon 2 and Horizon 3 thinkers, and they're in every area of the organisation at every level. So if you can identify those people and harness the power of their ingenuity to help you build horizons on Horizons 2 and 3, they're natural experimenters. They love talking to customers. They love to test and learn. Give those people a crack. There is no better environment than now to harness that power that's sitting in your organisation and really release the energy for those people to help you plan and shift elegantly to Horizon 2 and Horizon 3.
So just in the interest of time, we're going to take one more question. It's a question from Scott, and also Kira has a very similar question. So Lara, it's around customer validation. It can be time consuming. Do you have any strategies on how to efficiently get customer validation? And I guess the second part of the question from Kira is, what kind of resources do you need to work through the model quickly to get ahead of disruption?
Great. So thanks, Scott and Kira, for your great questions. So in terms of customer validation, it can be time consuming and it can be particularly simple. I guess it's as complex as you need to make it. For most of us, unless you're in an industry that's incredibly heavily regulated and legislated, which is a lot of us, to be honest, but for most customers, what we do is we have the conversation, and really being able to just have the honest conversation, schedule a Zoom meeting, talk to them, let them talk, and really listen to what they're saying and have follow-up questions about how you might adapt with them is the real key issue with customer validation. So most of us think that we might need to build the whole product out and show our best face and everything's shiny and perfect and ready to go to market. That's when customer validation can become slow and expensive. Really, it's about testing your early ideas with customers, and sometimes it's bringing them into the room, either literally or virtually, and having a customer discovery session with them where you talk about, you can iterate quickly what they need, how you might solve it, what they like about that solution, how you might iterate it. So in terms of doing it quickly and cheaply, it's about actually truly co-creating with customers. And the second part of the question, Suzanne, which I've now forgotten.
It was just, what kind of resources do you need to work on the model quickly to get ahead of disruption?
It's a really good idea, as I said, to bring people in from different parts of the organisation, all across the production chain, people who are customer facing, people in back office, people who are in strategy and corporate and communications. Bring a diverse team together from different levels of the organisation and have an open and honest conversation about where you are and where you think you're going. So the biggest tip I can give you is to don't just bring the same old people in to make those plans and create your strategic momentum. Really get a polyphony of voices across the organisation, because generally speaking, that's where the magic happens.
Wonderful. Thanks so much, Lara, and thank you, Steve. That's all we've got time for today for questioning. So we're going to go back to Tony to close. Thank you.
Thanks, Steve and Lara. You've packed a lot of content and insights into a very short amount of time. Macquarie Business School offers a number of short courses in strategy, business model canvas, and also design thinking. And if you're interested in following these up, our contact details are showing up on the screen now. And keep your eye out for future short courses and webinars offered by Macquarie Business School. Thanks very much.